Viewers, this is the second part of chapter number 2. In this video, we'll be understanding some other basic accounting terms. So let us start the video. The first topic which we have, that is the expense. Expenses are what? It is only the costs which are incurred for generating the revenue. So here we got the prepaid expense. So when we talk about the expenses which are prepaid, that is only the prepaid expense. Say it is an expense that has been paid in advance, or we can say the benefit of which will be available in future, like the expenses for insurance premium. Suppose we got the financial year for us, and yes, if we got the financial year, so the year will end on 31st of March, and the expenses are paid on 1st of October for whole year. So from 1st of October till 30th September it is paid. So in this manner our year will end on 31st of March. So the remaining 6 month expenses or remaining 6 month insurance premium is paid in advance. So in this manner, we can say prepaid expenses are the expenses which are paid in advance, and here we can calculate in this manner only. Usually we used to get the questions for prepaid expense. And yes, it will be treated as an asset for the business, because assets are only what the future economic benefits which we'll be getting, that is only the asset. So the amounts are paid in advance, so in future we'll be getting the services. So that is why prepaid expenses are treated as an asset for the business. Then we got outstanding expenses. These all are the expenses that has been incurred but which has not been paid. So the amount which is occurred already but in the business yet not paid, so that is only the outstanding expenses. The amount is due, the amount is payable. Say the example, salary payable to an employee. For this example, we can see that is what salary which is not yet paid to the employees, but we have taken the services. So that is only what the expenses which are due, the expenses which are not paid yet. So these all things will be treated as an outstanding expense. And yes, these all expenses will be the liability for the business. Now, the next topic for here will be understanding it is related with the income. So income is what? It is only the profit which is earned during an accounting period, or we can say it is only the difference of the income, or we can say it is only the income of revenue and expense. So what is income? So it is only the difference of revenue and expense. So in income, when we talk about, it is only the broader term than the term profit, because the profit includes both operating as well as the non-operating activities. When we talk about the operating activities for the business, so the operating activities are what? So the activities carried out by the enterprise to earn profit on regular basis. These all activities will be there, like sale of the goods and services or rendering of the services. So these all things are what? These all things are the operating activities, as income includes operating as well as the non-operating activity. But when we talk about the profit, it includes only the operating activities. So here we got the losses. Losses are what? Loss is only the or we can say excess of the expenses of a period over its revenue. When we talk about the expenses are more, that in that case only we'll get the loss. So that is only the loss. So the expenses and the revenues difference will lead to the loss. So when the expenses will be more than its revenue, then only the business will be getting the loss. Here we got the next term, which is purchase. What is purchase? The term purchase is used only for goods procured by a business, and that too every time it should be there for resale purpose, not for using the things in the business. If it is for using, so that then it will be treated as the asset for the business. So here we need to understand the goods or the items which are there for resale purpose or for producing the products which are also to be sold. So in that case, these all items will be treated as the purchase for the business. In case of the trading concern, it is the purchase of the final goods, and if it is the manufacturing concern, then it will be then the raw materials will be treated as the purchase. Purchase may be cash purchase, and it can be even the credit purchase. Here we got the next concept, that is purchase return. When the goods which we have purchased and for any reason the goods are not up to the mark, or for any reason we want to return it to the supplier. So when we are returning those goods, when we are returning the purchased good, then it will be treated as the purchase return item. So here we got the purchase as well as the purchase return. But when we are purchasing the good, it will always be there with the invoice value. Sales are the total revenues from the goods sold or the service provided to the customers. Sales may be cash sales even, and the credit sales as well. So these goods may be the purchased goods as well, which is there for resale, or the manufactured by the enterprise even. So the term sales includes both cash as well as the credit sales, and when goods are sold for cash, then it is termed as cash sales, and when goods are sold on credit, then it is termed as credit sales. Here we got the next concept that is related with the sales return. So sales return are what? As business, they are selling the goods. For any reason, if the customers are not satisfied with the products, they may return those goods. So that is only the sales return, the goods when the customers are returning for any reason, if they got extra or for any reason if they are returning those goods, then it will be termed as the sales return. Here we got the term goods. When we talk about the term goods, it is only the items, or we can say the physical items of trade that are purchased to be sold. It means the business, they are dealing with the products in which the business deal in. So the items that are purchased for the purpose of resale, not for use in the business, then only it will be called as goods. If it is for using purpose, then it will be called as asset for the business. Usually when we talk about the term goods, it is the broader concept, as the term applies to all the items making up for the sale or for purchases of the business. They are the stock in trade of an enterprise. So here we can say the goods which are unsold, that is only the part of stock. Then here comes the next concept, which is related with the trade receivable, the amount which is receivable for the services which are rendered or for the sale of the goods even. So the amount which is to be received for those sale or for the services which are provided in the ordinary course of business, they are the only trade receivable. So trade receivable is what? It is the sum total of the debtors and even the bills receivable. So trade receivable includes both debtor as well as the bills receivable. Who all are the debtors for the business? So debtor is a person who owes amount against the credit sale of the goods or the services rendered. So business is providing the service or the goods business is selling to the customer, and the customer is not paying the amount to us. So the amount which is to be received from that person, they are called as our debtors. Similarly, this includes trade receivable includes bills receivable as well. So it is what? Bill receivable means that is only the bill of exchange accepted by that person, by the debtor. Instead of paying the amount, he is giving the bill. So then we are getting the bill, and that bill will be treated as the asset, as that bill will only specify that on which day that amount is to be received from the party. Here comes the another concept that is related with the trade payables. It is what? It is the amount payable for the purchase of the goods or even the services taken in an ordinary course of the business. Or it is what? It is the amount due to the seller of the goods by the enterprise, we can say in simple words. So the amount payable for the services taken or the purchase of the goods. So it includes the two parties, that is for the creditors as well as the bills payable. So creditors are the person or an enterprise owes the amount against that credit purchase of the goods or the services which are taken by the business. So that is what sometimes the business used to purchase the goods on credit. So from the party to whom business has to pay the amount in the near future, so the party will be treated as the creditor for the business. Sometimes instead of paying the amount, the business used to write the bill on that party. So in that case, bills payable will be issued from the business. And in that case, bills payable will be the liability for the business. So bills payable are what? Bills payable means a bill of exchange which is accepted by the person or the enterprise, the amount of which will be payable on that particular date, on that specified date which is mentioned on that bill. Now, here comes the next concept that is related with the bad debts. Usually, the business used to provide the goods on credit, and the parties used to pay the amount in future. And if the party is not paying the amount, then what it is? That amount which is irrecoverable, the amount which is not received from that party. So the amount owed to the business, that is written off, business used to write off that amount as it has become irrecoverable. That's the reason business used to write off. So bad debts are the losses for the business. So the part of debt which cannot be recovered anymore from the debtors just because of insolvency. Due to insolvency, that is what, not in a position to pay its debt, that party is not paying the amount. So in that case, how that amount will be treated? So that amount is the loss for the business, and yes, business will present that loss as the bad debt. The next topic that is what the balance sheet. When we talk about the balance sheet, it is one of the statement of the financial position of an enterprise or of an individual. At a given date, at a particular date, the business used to make the balance sheet. Why the business used to make the balance sheet? So that they can detect their financial position, so that they can identify the assets and the liabilities of the business. So for balance sheet, every time we are going to equate this equation which is mentioned, that is what two sides of the balance sheet, asset equals to liabilities plus capital. Total of asset will be equal to total of liability, which includes the outside liabilities as well as the internal liability. When we talk about the outside liabilities, it is only the term liabilities are mentioned for that. And when we talk about the internal liability, for that the word capital is mentioned. Here we got the two sides for accountancy. The first side is the debit side and the other side is the credit side. As in mathematics, we used to see LHS and the RHS side. So similarly, in accountancy, we have the two sides. That is what one side is the debit side and the another side is the credit side. Here comes the next concept that is related with the depreciation. It is one of the important chapter which is there in class 11, and in that chapter also we'll be seeing how to depreciate the assets, as every time the business used to purchase the asset, and yes, the value of that asset will not remain same. So in that case, the value of that particular fixed asset used to reduce. Gradual decrease in the value of an asset due to regular wear and tear, because continuously we are using, the business is using those assets. So that is what the assets are used continuously. So in that case, the value of that particular asset will fall. That is only what that value which is falling, the value which is decreasing, that is only considered as depreciation. It can be because of obsolescence. That is only what, just because of change in fashion, just because of change in trend and all. So that is only what obsolescence means. So here depreciation happens just because of change in fashion, just because of change in trend. So that is what here it may be, the value of the asset may fall because of the obsolescence or because of the accident or because of regular usage. Here comes the last concept for this video, that is related with the rebate. It is what? It is only the reduction in the price allowed by the seller of the goods. After selling the good, rebate is offered and allowed on the sales completed in the past. It is allowed for the reason other than for which trade discount and the cash discounts are allowed. For example, we can say discounts allowed because of the poor quality of the goods. So sometimes the rebate is provided to the customer, and yes, the business used to provide those discount. Why the business is providing those discount? Just because of the poor quality of the goods and the customers are complaining for the same. So the business may give rebate to that party. That is only the rebate for the business. So that was it for this video. Thank you, children.